One of the hottest topics in lots of different real estate forums on the internet is, how does a VA loan assumption work, and can I do one? Well, we're going to approach this from both sides of the coin, from both the buyer side and the seller side. So first off, let's talk just general market. Currently, over 85% of homeowners who have a mortgage have an interest rate that's lower than 6%. So what does that mean to you if you're a buyer? Well, there are people that are selling out there that have a lower interest rate than what the current market is. If they have a VA loan and you can buy that house, you could potentially do a loan assumption. So what is a loan assumption? Well, it's exactly what it sounds like. So let's say they bought their house for $400,000. They paid it down a little bit to say $380,000, something like that. They're selling it for $450,000. When you assume a loan, what you're doing is you're assuming their current loan balance. So in this case, they've paid it down to $380,000. You would be assuming $380,000 at whatever their interest rate is. Their interest rate might be 4%, 3%, heck, maybe they're in one of those twos. You assume that interest rate at $380,000, but they're selling the house for $450,000. Until recently, you could not have a second loan on that unless that loan was also assumable. So what would happen is the difference between the purchase price of $450,000 and the current loan amount of $380,000, you had to pay that difference in cash. Recently, the VA changed the rule where you can do a second loan, a second mortgage, and that second mortgage does not have to be assumable. All of the loan assumption process, it's not going to go through your standard loan officer. It's not going to go through your standard bank. What's going to happen is you're going to have to go to the servicer who currently holds that seller's mortgage, and you do all the paperwork through that. The process is not going to be easy. It's not going to be super fun. It's literally, 60, 90, I've heard horror stories of them lasting up to 4, 5, 6 months. So it takes a little bit of time, but it goes through that processor or through the servicer of the current loan. So that's from the buy side. If you can find one that fits, that maybe they don't have a ton of equity in it, but they have a low interest rate, that's going to be a really attractive deal for you. Now, let's talk about the seller. If you have a VA loan and you are going to offer it for assumption, it is critical. If you don't hear anything else I say, listen to this. Do not let a non-veteran assume your loan. Do not let a veteran who doesn't have enough entitlement to replace your entitlement, do not let them assume your loan. Here's the reason why. With a VA loan, let's say you have a $400,000 house. There's $100,000 of VA entitlement, 25% of your loan amount, that is now tied up in that house. If you're going to let a veteran assume your loan, they have to have, maybe they have 1 or 2 VA loans already active. If they don't have enough entitlement to replace your entitlement, then your entitlement is still stuck with that house. The mortgage would move over to the buyer, so it's going to be off your credit report. But from a VA side of things, the VA is going to still be tracking that you owe them X amount of dollars for, potentially, or your entitlement is just, you don't owe them dollars, but your entitlement is encumbered at that point. So now you can't go use that entitlement to buy another house. The other problem with it is this: if somebody assumes your loan and then 3 years from now, 4 years, whatever, they go into financial difficulty and then they end up being foreclosed upon, you have lost that VA entitlement forever. Well, maybe not forever, but until you pay the VA back for what money they lost potentially on that foreclosure, you are going to be out of luck with using that entitlement again. So that's just the number one thing for you as a seller. Make sure that you're getting your entitlement back when you do the loan assumption. Make sure that you're having a veteran take over that loan. Non-veterans, investors, all that stuff. Like, if you're a buyer and you're one of those people and a veteran is going to let you do it, I guess so be it. But as a veteran, do not let somebody that's not VA eligible assume your loan. If you have any questions, feel free to reach out to me. Great topic, a lot of fun. I mean, mortgages are just a great place to be right now. So if I could ever do anything for you, please let me know.